Still, those job numbers did little to help markets on Friday. A mass sell-off for a second day due to tariff uncertainty. And to discuss the U.S. job market and ongoing economic growth, I'm joined by Santosh Rao. He's a partner and head of research at Manhattan Venture Partners. Welcome back to the show. Great having you. And look, the job report came in stronger than expected. What were the key drivers of this creation?
Well, the job market has been good overall. I mean, if you see, that's what's holding up the economy so far, because the job market was good, unemployment rate was good, so there was no panic as such. But you have to remember one thing. I was looking at one analysis. I don't think all the layoffs that happened in the federal government have been factored in, because the way they measure and the time that they measure the unemployment numbers or the employment numbers. So I think, according to one estimate, those numbers were missed. I think the next month's numbers are going to see the full impact of the revenue of the unemployed people in the federal government. But that aside, overall, things have been going along fine so far, but it's just the future that's the problem. Let's see if there are any hurdles coming up, which we think there are. So I think that's the big thing. It's going ahead. Economy was cruising along, not cruising along, but doing well, holding up. But I think there are some hurdles. This tariffs is going to throw a wrench in the whole equation at this point.
Yeah, exactly. You brought in the other big topic, which is tariffs. How do you expect tariffs to hit jobs in the short term, but also in the long term, because President Donald Trump speaks about the long-term effects of tariffs?
Yeah. So I think in the long term, the economy will adjust. People will adjust. We will probably get used to higher prices. There will be layoffs. There will be cutbacks. People will buy lower. Growth will be impacted slightly. The expectation of inflation will come into the equation. And that's what the federal chairman said today. Fed chair said today that he's more worried about anchoring the inflation. He doesn't want the expectations to get ahead of everyone. So he wants to anchor that, because that's his second mandate, to keep the inflation, the prices under control. So he's going to stay there, keep the rates higher, and not let inflation rear its ugly head. So I think we'll see where it goes. But overall, I think you're going to see Trump is probably right. If his thinking is correct and works out, he wants a lot of onshoring. He expects companies to come on board, come inside, start hiring people, and start producing inside. We'll have jobs, we'll have growth. That's his equation. But he's not realizing or not recognizing that the other countries may also do the same thing and kind of boycott of sorts, as a revenge, or do something of sort. It won't be a linear equation where, hey, I'm reducing taxes, come on down. It may not work out that way, and that's the big risk. But his equation is that, hey, things are going to be booming here. We're going to bring companies here. Everybody would love to come here because we're going to lower taxes, no tariffs if you do everything in here. So I think things like that. So it has to work out. So let's wait and see. The tariff, I don't think the last word has been written on the tariffs. Maybe there will be a negotiated settlement. We'll see what it is. The 10% across the board was a good idea. Okay, that made sense. But this reciprocal tariffs, I think that's kind of too excessive. We don't know if it's a bargaining chip or if it's really he means it. So let's wait and see. Even his people in his own government, in his own party, are beginning to object to a few things. So I think there's the last word hasn't been written there. So a lot of cross currents going on.
Santosh?
This weekend is going to be interesting.
Yes, absolutely. I'd like to go back to the jobs market, and I'd like to get a sense of what kind of jobs is the administration looking to create with this policy?
Well, he expects a lot of technology companies to come in, a lot of chip companies to produce here. He expects manufacturing to be done here. He expects all the Nikes of all those guys to start making shoes in here. So although he wants all the consumer products and manufacturing, all of them to come into U.S. and start producing here and hire American workers as opposed to Vietnamese and Chinese, so things like that. I think that's his far-fetched, that's his equation, and he's been saying that. It's nothing new. Even 30 years ago, when Trump was just wasn't even a candidate, he's been crying or raising his voice saying that America has been hollowed out, all the manufacturing is gone, we need to bring it back. So he's been hammering that drum for a long time. And that's what he wants to do. He wants to carry that out. He believes strongly that America needs to get back on its feet in terms of being self-sufficient. I think that's his vision. And he thinks that when he do that, people will hire. There's going to be short-term displacement, you can call it. So I think, like the Treasury Secretary said, he needs to detox everybody, detox the economy. People are used to free money. They enjoyed this ride for so long. He feels that now we need to get used to maybe higher prices, pay the higher price for the sake of independence and national pride. So I think that's their mission, that's their focus, and they're not worried about the short-term disruption. But they don't have too much time. I mean, midterm elections are in 2 years, so he really needs to rush and start showing results within, I would say, within 3 or 4 months.
Yeah, absolutely. And Santosh, here there are many questions, because after the NASDAQ got into bear territory, people are starting to talk about the R word, as in recession, right? And how, I mean, analysts across Wall Street have sharply heightened, the probability of a recession. How do you see that?
Well, yes, even the S word has come into the equation, stagflation. So I've been hearing a lot of things. So economists have been wrong. They expected a recession 2 years back. So I think I wouldn't take their full word for it. But right now, the signs look like it. If you lower immigration, raise tariffs, you're really affecting the growth side of the equation, which is really bad, and rising inflation here. So I think that's stagflation, where no growth and higher prices. So that you don't want. And recession, if the tariffs is executed the way he wants it and really punish everyone, there is going to be a short-term recession-like feeling. I don't know if we're going to go totally into a recession, but definitely we are smelling recession down the road at this rate. So hopefully there will be some refinement, some constructive engagement, and a proper way of doing all this. So let's wait and see. It's still early. I think the recession call, JP Morgan's recession call of 60%, is based on the fact that he goes all out on this tariffs and doesn't change his mind. So let's wait and see if that's the case. Yes, if he does that, there's the risk goes up, but I don't think it's going to happen immediately. It's down the road when we see the full impact of all the lower immigration and higher prices.
Santosh Rao, thank you for coming on the show. Great having you.
Thank you. Thanks for having me.